Okay, folks, welcome to the Contrarian Trader. This is Robert Desmond. It is Wednesday, May the 18th, 2011. Folks, tonight I'd like to discuss two stocks, the first being HSII, the second being USNH. Those are the stock symbols, obviously. They are two stocks that hit our extreme oversold stock screener this evening. And I'll get to those in a moment, but before I do, for those international visitors, on our homepage, you can visit each page and read in your own language. So please do that through Google Translate. Okay, let's get to the first stock. First stock is Heidrick & Struggles. This is an executive recruitment firm that has had some tough times. Let's face it. We are in a global so-called recovery. I frankly don't believe it yet. I haven't seen evidence of it, with the exception of the fact that you have the Federal Reserve priming the pump, and that's soon to stop in June. But for now, anyway, Heidrick & Struggles appears to be an extreme oversold stock. Now, how do we define an extreme oversold stock? Well, there are certain criteria that I use on the charts, which I'll get to in a moment. Real quickly, this is my daily chart, which we'll discuss. But before we do that, before I even get to the chart, what do I want to do? I want to take a look first at the news to make sure that there is nothing out there that could possibly derail this trade or act as an obstacle. So what I want to do first is take a look at company events. Simply go to Google Finance. Take a look at it, and there it is. They don't. Heidrick & Struggles does not report earnings until July 25th. So that's not an issue. There's no headline news that I'm concerned about at this point. And lastly, what I want to take a look at are the shares that are short. You have 4.2% of the shares that are short. Number of shares short, 566,000 shares short. You have about, let's say, about 5.5 days to cover that short position. So that tells you, for a stock that is at extreme oversold levels, you have potentially nice rally that can occur. Now, before we get to the daily chart, we want to take first look at the weekly chart. Many traders do not do this, and that's short-sighted. The reason why we take a look at the weekly chart is because we want to look for historical support. And we see historical support on Heidrick & Struggles at the 19, let's round it down. Market traders like round numbers, the $19 per share level. We have found support there many, many times before. We found it back there in November, October of 2010, back in July of 2010, back in August of 2009. It acted as previous resistance as well. So we like the support level. We can trade off of this. This is a friendly support level. Now let's get to our daily chart. Our daily chart is indicating to us that this stock is almost ready to be bought, but not quite yet. For those folks that use the RSI or the stochastics as your religious oscillators to get into a stock, I'm sure you've been burned before. Because if you listen to the talking heads on Wall Street and that appear on CNBC, or those bloggers that say, buy a stock when the RSI goes below 30, or sell a stock when the stochastics go below 20. If you were to listen to them with regard to the RSI, when it went below 30 back here, look at the loss you would have had. Same thing with the stochastics. Suppose you bought back here, you would have even been worse off, because you had a head fake rally, rolled over, went right back down again. So these thugs on Wall Street love to tell you when to buy. They never like to tell you when to sell. So Is Heinrich & Struggles ready to be bought just yet? No. Not quite yet. Let's go over why really quick. You have an RSI that by our screen is, yes, at extreme oversold level. But you need to use the RSI in coordination with the moving averages, also with the candlestick formations, also with the volume bars, also the stochastics. They all need to be used in combination. And I can tell you, in using this picture here, why I wouldn't buy this stock right now. One, you have the 50-day moving average, which is threatening to take out the 200-day moving average. That's a negative divergence. That is the nuclear holocaust of stock trading. You never want to see this on a stock that you like and you want to buy. Now, this stock has taken a beating, and I do not believe that this negative divergence is going to cause the stock to go down considerably further. However, until this occurs, until this event occurs, and it's going to take an act of God for it not to occur, there is going to be pressure on the stock, and you're not going to have technicians want to come in and accumulate shares until this is in the rearview mirror. Again, the 50-day moving average is threatening to take out the 200-day moving average. This stock will not rally until that occurs. It can rally for a couple of days. It's not going to have a meaningful rally, a recovery, until that occurs. So, to my members, were you a member when I pull the trigger on this trade, meaning when I begin to build a position? We never just buy all at once, or we never just short all at once. We begin to build a position. Were you a member of the Contrarian Trader? If you signed up this evening, went to your email box, you would see an alert. You would get an intraday on your mobile device, on your cell phone, and it would tell you that we are beginning to add to HSII. We are adding it to the watch list this evening. In the evening, you would go to the members area, and you would see that it's been added to the watch list. Now let's move on to USNH. USNH is in the healthcare group. This sector is beginning to have some upward move. It's beginning to show signs as the overall market begins to decay. Healthcare is beginning to do well. So much like what we did on our HSII trade, we want to take a look at company events. When is the stock going to report earnings? It's not going to report earnings until the 25th of July. That's good. We're not going to begin accumulating the stock, and the next day they report poor earnings, and we're going to get hammered. We want to make sure that this event is behind us. We do not trade on earnings. Never, ever, ever. It's too risky. That's what Wall Street wants you to do. We don't do that. Now let's go take a look at the short interest in SUNH Healthcare Group. SUNH Healthcare has about 800,000 shares short, about 188,000, say 189,000 share per day volume. So you're looking at a potential short covering rally of, say, about 4 days on this stock. So we like it. We can trade that. That's good for a short-term trade. Because remember, we're not buying this for an investment. We're buying it for a swing trade. An investment is multi-month. A swing trade is multi-day. Let's get to the charts. This is your weekly chart. No different than with HSII. We want to take a look at SUNH Healthcare Group. Where is historical support and historical resistance? And you can see that the $10 per share level has historically been, and there is a caveat to that historical support, and I'll get to that in a moment, has historically been good support. So we're going to look for that to be our first support level. We're not there yet. Let's get to the daily chart, and I'll say what that, I'll bring to attention what my caveat is on that historical support and why we may break that and head lower. That $10 per share level and head lower. Now, you could see that back in November, we topped out at $9.57. We pulled back and we broke out higher, probably on earnings or some other event. So we might just pull back and probably be a rapid 1, 2, 3 thing, and we'll fill this gap at 9.57. So, do we like $10 per share as our initial entry point? Yes. Would I like to see it get down to 9.57? If it gets there, I'll be buying the stock hand over fist. But in the short term, it may not make it there just yet. So in the short term, we want to keep an eye on the RSI, which is at extreme oversold levels. We have volume bars, which are they're okay. They're today being Wednesday the 18th, we showed somewhat of a rise in down volume, but that's okay. We're still below the daily average volume. The ADX line is still not where we want it to be. Stokes still not where we want it to be. So we're going to watch this. We're going to add this to the watch list. And again, I'll be sending out an alert to members when we do begin to build a position in USNH. So I urge you on both USNH and HSII, do not go running in tomorrow and buying these stocks hand over fist. It's too early. It's way too early. I beg of you to wait. Show discipline. And for those of you that are interested in becoming a member of the Contrarian Trader and you want to get those alerts, you want to see when my members are going to be alerted, then please join the Contrarian Trader. Hit the join button. It's $29.95 per month. Folks, you spend $2.25 a day on a Starbucks coffee. You're spending $8, $9 on each end of a trade several times a month, only to get shaken out on bad news or bad advice from your broker, from CNBC, from the guy on the street. Trade the way contrarians do. Look where Wall Street doesn't want you to be looking. They want you to be looking at extreme overbought stocks. I want you to take a look at stocks that nobody is watching right now. That's the benefit I offer you. So please, give us a shot. We are on Twitter, YouTube, Facebook. And every once in a while, as I'm doing this evening, I'll post a video. Or you can sign up for my Contrarian report, which is free, and you'll get some updates as well. But to get the advice that you'll need to trade these types of markets, you need to become a member. And you have access to the members area. And that's it, folks. Have a great, great trading week. If you're interested in giving me a call, visit my contact page. Yes, that's me, my poor, recently deceased dog. And there's my telephone number. You can email me as well, robert@thecontrariantrader.com. I look forward to hearing from you. All the best, and please stay in touch. God bless. Have a great evening. Bye-bye.